It is a good morning, everyone. Hope everyone has had a good week and is having a good weekend. This is week 28 review. Before I start out, I want to just mention a question I had. So about characteristics of the sessions in a day. So the question was the sessions of the markets and their characteristics. Because I recently found out New York session starts at 7. Always thought it was 8:30. What I also don't get is trading during London the same as New York. I was always under the impression that London would often make the higher low of the day, meaning I use higher time frame analysis that I expect London to go opposite the daily bias. Now, what he's describing a scenario, which the second part of his second question, he's describing a scenario which often happens, but doesn't always happen like that. So the way I want to quickly explain that, how I view sessions before I get into this, because it's going to be important. But the way I view sessions is like a building block to a profile, right? So if Asia does a certain thing, I might be expecting London to do something else related in relation to Asia. And if London doesn't do it, then I might look for New York to do it, or the PM session. So this is why whenever I see a large range in London and Asia and it's trending in one direction, I have lower expectation for the New York session. I know it's not going to be as good because there's no consolidation ahead of it. And when there is consolidation ahead of it, where London doesn't do too much or makes the high of the day above the Asia short-term high and Asia consolidates, but it's more or less manipulated higher, and we haven't manipulated beneath Asia low yet, and we're leaving that Asia low for the New York session. That's when I have like the highest probability. You'll see that that's when I'm the most comfortable. When there's consolidation ahead of New York, and we've left either the Asia high or low open or London high or low open for New York to go down and get. And think of it as the days. Sessions are just like days. If you're trading and you get up in the morning and you see that we've already hit the previous day low, and you're bearish, would you still like to be bearish as much as if we didn't? No, obviously you'd rather if we didn't even hit that low yet, so you can capture more. And this is kind of like the thing is when I'm bullish, let's say, and I see a trend in the Asia and London session, I don't like that because we've already put ourselves in a premium, and the AM session is more likely to chop around, seek and destroy, consolidate, or be very slow, or even reverse into the day's range and then not do anything else. So the sessions are, the way I use it is I think of it algorithmically. If you were to program it, I think it would make sense. And if you believe price is fractal, I think it'd make a lot of sense. Kind of like quarterly theory. It basically is quarterly theory. Where you go from 1800 to midnight, 1800 to 0, right? That's the Asia session, and you go from 0 to 6, which is the London session, and then 6 to 12, New York session, and 12 to 1800, which is 1200 to 1800, which is the PM session, right, or the afternoon session. And then these 4 sessions is how I look at price. I don't think there's, whether you want to use 7 a.m., 8:30, 9:30 for the New York Open, it doesn't matter, to be honest. It really doesn't matter. I think ICT said 9:30, sometimes 8:30, and then even 7 a.m. So I just use 6 a.m. because that way it's clean. I know every session is the same, so it behaves the same way, but it can behave differently in days. But overall, like what the delivery price is the same. I'm just gonna manipulate on a lower time frame, and then expand on a lower time frame, manipulating the higher time frame instead of the next session, which expands higher time frame. So what I said there is like, I'll show you in a quick example. Monday, London session expanded on the lower time frame. If you go down to the lower time frame, you see that 3 a.m., which is equivalent to 10 a.m. 3 a.m. expanded higher. Okay, this is a higher time frame manipulation to make the high of the day. Then the 6 a.m. expands lower. So It did exactly 6 a.m. did exactly what London did on the lower time frame, but it did it on the higher time frame in the morning, and it did it the other direction. So prices fractally behave the same way no matter what session you're in. You can even see Asia expanding sometimes. But why doesn't Asia expand oftentimes? Because it's Asia. It's no one's trading the New York stocks during Asia. Everyone's coming home from work. Money's not as much in the market. But then everyone's trading in the morning because that's 9:30 open, and that's when everyone's putting money on the table. So that's why it moves the most. Okay, but if you go to some forex pairs, you'll see that it moves more. During London session sometimes a lot more because Europe is doing more trading during that time than it is during New York, or well, not always, but sometimes, yeah. Especially certain pairs. Some pairs more than others. Anyways, that's what I wanted to highlight real quick. But anyways, let's get into the weekly review, and then I will try and highlight more sessions and how I was viewing them, because I do talk a lot about the different sessions this week. But let me get into the economic calendar. So right away, I know I've been reading the Fed speeches, and they're watching that PCE. They were waiting for that PCE. They're also waiting for the CPI in September, and then the unemployment rates next week. And so this Friday had a lot of impact. A lot of volatility was reserved for Friday. And so even though I deem durable good orders as a red. So even though there was red news in the beginning of the week, I knew that most of the trading would be at the end of the week. So therefore, Monday for me was a good trading day. Tuesday was be careful because we're getting closer to that news. We're 2 days ahead of the GDP and unemployment claims. And then also Wednesday was absolutely don't trade, because all we have is a Waller speech and then oil inventories, which I don't really look at too much. But also that's pretty. I don't know, but that's basically what I was looking at. And then GDP. This is a second estimate, so it's not it's a second quarter GDP, but a second estimate, which is a beat from what it was released at, from 2% forecast to 2.8%, and now from 2.8% to 3%. So the GDP is growing a lot faster than I guess the people thought. It's beat a lot from the first estimate, and now the second estimate is also a beat. I would say is an indication that you don't really need to cut rates, because if your GDP is growing and you have high rates, I don't know, like it's not indicating that we need to cut rates. Because I had a lot of people basically telling me that GDP was falling. It was 1.4%, and I'm like, just because it's the beginning of the year, it's not falling. Trust me. And then as you see, the GDP is higher. It's not a reason to cut rates because the GDP is falling. But what is the reason to cut rates is the labor market. So I think there's going to be the most attention next week. It's going to be a really good week, but it's also holiday week. So I think when those unemployment rates come out on Friday, we're going to see a lot of volatility after that until CPI. But yeah, so that's what I was looking at this week. And then you have Sunday, what I was going into Sunday. So there are two obvious gaps to look out for above and below. Ideally, if we are in bullish conditions, price should hesitate to trade down to the constant encroachment of the bullish fair value gap. So this large weekly gap, I'm saying that if we are going to go higher, which is possible because we're back into this balanced price range, then I would want this gap to stay open. I want parts of it to act as a breakaway gap. Preferably not even go back to constant encroachment, which I'm pretty sure it didn't. Maybe it just got just above constant encroachment, which is good. So we could see higher prices from there. But we need to see this next week. Well, I'm gonna leave that for next week. It is not crazy to pass down the previous week low. This being because of the week opening gap, which was left partly open, overextended, premium state of price we're in. So I'm talking about this new week opening gap. I said that a little weird, the phrase, but this new week opening gap, price came down, closed into it, but not through it, right? It did not close all the way through it and bounce out completely and went back up. So on the daily chart, parts of it's still open, which is why we could see another move back down into a deeper discount, right? This fair value gap, that fair value gap, or the inverse fair value gap. The Dow is still being bought more aggressively than the Nasdaq. This could be more S&T forming and a telling sign that we could still head lower. Right? This doesn't make the most sense as expected, as the expected September rate cuts should have pushed tech higher than safer, sounder, and less speculative stocks, making up the Dow due to lower borrowing costs. Tech relies heavy on speculation and investment. So what I'm saying here is maybe actually I should just remove that part. No, it's cleaner. So what I'm saying here is because tech is a lot of investment, when they have higher interest rates, it's bad for tech. So the fact that we're cutting, it should be good for tech, but it's not. You can see that the NASDAQ, and you can see even this week, the Dow made a new all-time high. The NASDAQ is still far from it. Didn't even go above the previous week high. So you see, this is some shenanigans going on. But this might not be because there's actually rate cuts. I think it's just because people are preferring safer stocks despite the rate cuts, because they actually believe that rate cuts will bring a crisis. Which historically, usually when the Federal Reserve cuts rates, a crisis happens, and the yield curve inverts, as I've talked about before. And so, not all the time, but this is what usually happens when the Federal Reserve starts to cut. Okay, I'm not going to get into this. A lot of too much speculation. Anyways, capital also seems to be moving out of the dollar, like if people were selling their dollars in expectation of lower rates, which could mean a weaker dollar. Lower rates means less income, and so Americans can buy less abroad from those in its debt. So now, even though we have not cut interest rates, look at what the dollar's doing. It's still going lower in the expectation of the rate cuts. So, I mean, the Federal Reserve used to do surprise rate cuts, and they would never speak. They would never, pull out economic data and release it to the public. No one knew what the GDP was. Gosh, I don't know about that one, but like they wouldn't have all these planned meetings and releases and question periods and all that. So this is the fact that they're talking about maybe rate cuts, the potential for rate cuts, has the market excited and has the market acting, without even having to do anything. So what's going to happen when they cut rates? Absolutely nothing, because they've already been factored in. So then what's the point of even cutting? And this is where, it's funny because I do have a point, but it just goes against a lot of what the industry believes. And I'm not saying there won't be any rate cuts, but I'm saying that if this keeps up, technically the Federal Reserve doesn't need to cut. All right, that's all I'm saying. But and now if this keeps up, I mean, it's already happened. But anyways, bond prices also still seem to be sticking higher with anticipation of rate cuts. This means that the yields are dropping since price and yield are inversely correlated. Now you can go look at the mortgage yields, you can go look at the treasury yields, any yield you want, and you see it's down. The yields are down, prices are up. So what you would expect to have again on a rate cut. Now there are a lot of metrics that can be used to measure the effects of rate cuts that are happening right now. As you see from dollar and bonds, interest rate cuts have been factored in. I think much of the market will be waiting for PCE print on Friday to deploy liquidity. This print is significant because it ensures the Fed of a rate cut or not. Also unemployment next week. Therefore, I still see the market conditions as poor and sticky. And it is what it is, and doesn't happen often. We're in these environments. So I think number one thing to highlight is, and I also didn't mention CPI in September, but the number one thing to highlight is, first of all, we're ahead of a rate cut, and now people have factored in that rate cut. So is there so much else to do than wait? No, there's not much else to do. So volatility is going to be decreased ahead of all the news, the important prints. But we're also in the summer, and there's not much people actually trading right now, moving price. But now on top of that, we're ahead of an election. So, and this election is very tight. It's not like people know who's going to win. It's very, very tight. And there might even be a civil war if, the one party doesn't win over the other. So, or even both ways. If anyone wins, there may be a civil war either way. But because people are so divided, and it's unfortunate to see, but half the people voting for one party and same with both parties don't even understand the view from the other party. they think they're evil or something. It's just crazy. So there's a lot of uncertainty, and there's also geopolitical uncertainty. So there's lots of things that could lead to slower market, and so if you want to sit here and say I don't want to trade until next year, I mean, I applaud you. Honestly, it's a very mature decision, right? Or if you want to take more time to tape read and do less, that's very good. So, anyways, with Monday, but I know when I say that, I know most people are not going to like that. And they're going to say, no, Leo, listen, I want to trade. I mean, I've already talked to some people about this, and they're like, I can't do that. I literally, I can't wait another month to trade. It's stupid. Yes, you can. Anyways, daily chart started hunting lower. This may be the beginning of a retracement. I will be keeping a close eye on Thursday's low, and I want to see how she trades around this level tomorrow. Price made a large, and so this is Thursday's low here. I want to see, so far it doesn't look like price is rejecting it higher. The bodies are closing beneath it, and we're sticking around it, right? We're not rejecting higher, but we're not also displacing. So I want to wait and see for that displacement. So price made a large run down this morning, with price running after London made the high of the day. I want to look closer at the London session too and study the run up to make the high of the day. This run left the dealing range, which formed the breaker and used to run her lower. Alright, and now this is where I talked about the London session sort of expanding on lower time frame. We're going to take a look at that. So immediately you have kind of Asia moving sideways. Maybe it's better shown here. Asia's kind of run down, left the big range, run back up, not went above the range, back into the range, and then the London session opens up. Notice how as soon as midnight hits, price starts a different delivery. It starts to trade higher, and then at 3 a.m. retraces into a fair value gap on the 50-minute chart that I'm highlighting there. Also this big inverse fair value gap and an order block there, bodies respecting the mean threshold. Okay, so then price runs higher to the relative equal highs. Now dropping down to the 5-minute chart, my model says look for a 5-minute short-term low in an area of interest. It's down here, 5-minute short-term low. Now I can go lower time frame, look for longs. Now, just looking at this low though, there isn't really much of an attempt higher. The whole idea behind the short-term low is that we have an attempt higher that tricks people into longs and then stops them out. This isn't too obvious, right? So you could expand this low. You could honestly just, well, you're going to lower time frame, you can see what I'm talking about. We don't really have much of an expansion here. Here neither. Here not even less. Well, actually a little bit more. But still, it's not very clear. And then you have a really nice move higher. But look at how it's building a trend lower and how it's consistently making a higher high. So there's lots of liquidity beneath here. And we haven't really manipulated in a way that fakes people out. So I think this is one reason why the algorithm seeked lower once more into this area down here, stopping anyone buying from this gap. And then, because if you're buying from this gap, you have to understand your stop needs to be here, right? Ideally, and it might even still come down there and hit it. But then as soon as we stop those people out and we come back and we inverse the gap, that's when immediately you get. This is when the inverse fair value gap traders get hard-ons and they long it, and they claim it's the best. But understanding the logic why the inverse fair value gap here was what you want to wait for is important, right? So there was no reason for anyone to go take a short in this side, any of this price action, right? Nobody felt comfortable shorting here. I don't think no one felt comfortable shorting there, but people I think would have felt comfortable shorting this inverse there, and then another inverse right there. If your bias is higher and you have the right inverse, you would have had a great day. And then institutional overflow entry drill. This is the trade I would want to take if I was trading this London session. It's what I would have hoped I would have taken, and for nice 30 points with no drawdown. So anyways, before I get into the morning, well actually just first look at how the London session ran back down to a discount and then ran higher. Same thing with the morning session. Ran up to a premium and then ran lower. All right. Now I did stream this day, and so I want to go back to my journal and read what I was looking at. So ahead of the stream, I said price has already traded beneath on lows, leaving a breaker pattern on the hourly chart. I'd like to see if she displaces with speed and distance lower. If this is so, I will not be trading today, and this is what happened. However, if price fails to displace lower here, I would be more open for longs back into line range. So far, it does not look like price wants to displace lower with where she is closing and just slightly wicking underneath on lows. Another scenario is price trades higher and makes a 930 Judas swing for a new daily high. Now this is least probable, and I would only be open to shorts, but I wouldn't be open to long up to there, right? But because I'm still studying to see how price is reacting around this. So far, though, it looks from this hourly chart like it's not going to go lower, and it's rejecting higher. I did a good job anticipating after 10 o'clock. Before I had a conflicted bias, I was noticing price was hesitating to displace rapidly beneath the green line, which is the point. Whoa. Hold on, which is the point of interest. This right here, that's the low I was talking about on the hourly chart, failing to displace beneath it. But after I let 930 play out, I can see how price stayed out of much of a premium, only inducing a little bit of liquidity, quickly hunted lower thereafter. So I would have wanted to see more liquidity being grabbed, unfortunately, or more time spent higher, a little bit more than just waking up there very quickly, but unfortunately it didn't happen. So I did do a nice job though. I was streaming that day of calling the 10 o'clock hour after it had having the right bias. But anyways, going to the 930 open, you can see the immediate rebalance on the 5-minute chart after we left trade into the higher time frame, and we went lower, displacing beneath this low and the hourly low back there. I don't show on this chart. Now it's like confirmation. I'm like, okay, as 10 o'clock hit, I'm like, okay, we're going to go lower. I spotted this immediate rebalance, and I like this immediate rebalance because you can see price, the wicks rejected this low, right, inside in the middle candle, balancing out the middle candle. It rejected it. And so if the bodies had closed up here, it wouldn't have been as good. But because the bodies rejected it, and most importantly, there was a higher time frame, or not higher, gap above higher in the chart, this was a breakaway gap. And I love to see immediate rebalances when there's a breakaway gap. It's my favorite time to look for an immediate rebalance. And then price ran very quickly down to the previous day low. This is the 1-minute chart. In the morning, I was looking at that order block, and you can see me on the live wanting to, I was framing sort of a bullish bias off this order block to go higher. And that did not happen. It came back, and then I said as it came back, actually my stream cut out. I watched it, and my Wi-Fi disconnected. But I would have had a break-even stop. If the stream hadn't disconnected, you would have heard me say that. As it came and traded back down to the order block, and then price continued lower, obviously, and then that turned me into a bear because this failed. This delivery failed. Right, the Judas swing I wanted to see failed, so I did not trade because we started to displace lower. And that's it for Monday and Tuesday. So so far price has not expanded lower and instead rejected to create an up close candle. I want to see if price fails to trade the previous day high and continues lower quickly tomorrow. This is what I'd want to see for lower prices. Otherwise, price may find support with the 1-hour breaker and run for a previous week high. I will be more confident to have a one-sided conviction tomorrow morning. So I'm talking about either. Wait. I want to see if price fails to trade previous day high. Yeah, so this high here, I want to see if price fails to trade through it and then continues turns lower because we did have an up close candle. Right, and we don't seem to be displacing beneath Thursday's low. However, we're still respecting these up close candles as resistance. Okay, so I mean it could just be very slow. This Tuesday was absent of news. And then if we do go higher, and I'm looking at this hourly breaker. Okay, so this was a great morning session. I was able to foresee a reversal in the morning after failing to displace lower. The low of the day conveniently occurred during the 9:30 open. Interestingly enough, a temporary high of the day was placed in London. This was not safe like how yesterday's London session made the high of the day. We went back there up there due to the discount state she was in. Now, if you look at the previous day and this date, just the data from the current week, the week is in a discount. Maybe not on the higher time frame, but the week, if you just look at the data from this week, is in a discount. And so creating another London high of the day when there's no news, I mean, it's possible, but then what was I looking at? What I was looking at on that day is I get up and I see this. This is taken at 9:13, failing to displace beneath that low. All right. Well, I mean, not yet. At this, what I was saying here was she has already traded the previous day low. I want to take the day to measure the behavior as we pass through this low. So I took the day off as I was already planning on doing anyway, and then I just tape read. If price shows me more displacement lower, I know we will be seeking a discount this week. Otherwise, with price running back into the current day range too much, price will be less likely to deliver sustained moves lower. This entry happened very quickly, and this is when I was paper trading it and was not quick to press the button. So this is an entry that I took as a reverse, as I noticed that, before I get to that, actually, let me go back. As I noticed that it failed to displace beneath the previous day low, I knew that, okay, well, we might be going higher. Where can you aim higher? Previous session high. It's the same thing as the previous day high, right? You can aim for previous day high if you think it's going to get up there. Previous session high, it's the same thing. They act the same way. Just that previous day high is happening on a much higher time frame than previous session high is happening on. So, yeah, that's what I want to mention now. Anyways, I do want to take a look at London session. Actually, I noticed that I did once again journal that. You get a 15-minute bullish fair value gap, which I don't highlight here, but it's this one there. Price drops beneath these lows, which are intermediate term lows, into a fair value gap. At the same time, look at the consolidation. Spot the consolidation ahead of the 3 a.m. hour. 3 a.m. acts like 10 o'clock. It's the silver bullet hour, right? After the London and Frankfurt open at 2 a.m. and 3 a.m. And so you get a manipulation at 3 a.m. lower, opposing the bias of the session. Same way that London opposes the bias of the day, often, not always. Inside the London session, you get 3 a.m. or 2 a.m. at least, sometimes early 3 a.m., which will often oppose the bias of the London session or look to make a small run against it. So this is what happens here. 3 a.m. opens up, runs lower, brings the short-term low into higher time frame fair value gap, and then it runs higher very quickly, failing to displace beneath these lows through the fair value gap. So you could have looked for longs, and then again at the early 6 a.m. there was a really nice. This would have been my model. 15-minute bearish fair value gap, 5-minute short-term high, but I would not have been trading. At that time, I'm just journaling it though. You see the failure to displace by that 5-minute short-term high, being resisted in new day opening gap. That's a really nice signature. And of course, there's no algorithm, so that orange level is just random. It just happened. Price happened to move around it. So a new day opening gap all the way back from July 23rd. Price just happened to be respecting it very, very nicely. So anyways, there was a very nice institutional overflow entry drill that I can see dropping down to the lower time frame. So I'm talking about this one. Not talking about these up here, 5 a.m., 6 a.m. I wouldn't be able to confidently trade that consistently every day. It's just there for the sake of being there, though. But I'm talking about this institutional overflow entry drill. You see price very quickly runs up, closes above this bearish fair value gap. Institutional overflow entry drill here. Price not filling in that completely. And then we continue going higher for the rest of the morning above buy side liquidity. Okay, so going on to more striking price action in the morning. I didn't see the prettiest reversal, but still she is showing her hand the same way she does every day, every week, and doesn't stop. So this 5-minute short-term low, failure to displace beneath it, quick rejection higher, long wicks, blasting through the 15-minute bullish breaker, not even retracing, leaving breakaway gaps. That should be signature. We're going to go much higher, right, to the previous session high. And there was a nice institutional overflow entry drill, and this is what I'm going to talk about here. So, it happened quick, and I wasn't able to get in on it. I'm talking about this one here. It happened too quick for me. But I was watching it, had my finger on a buy button on a paper trading account, and I did not click it because I was, one, it was fast, but also it was a confidence thing. I wanted to see more of the gap being traded to. And so the reason is with the way the pre-market expanded lower, see the big range it left hitting the previous day low, and I was already bearish. I didn't want to see the same price action as yesterday repeat, which is the displacement, right? Because we're already at a discount, there's no news. I decided to stay off the charts. I want to wait until Thursday and Friday news and avoid doing anything tomorrow. Okay, so very mature decision there. But actually, I don't know if I'm pretty sure I did something the next day. But we'll go ahead and see. No, actually, I don't think I did. But anyways, that's Tuesday, and then we'll go to Wednesday. So today's daily chart, I drew lower. This is the sort of displacement I was looking for to consider lower prices. We are resisting the up close candle and displacing through the lows, which is evidence of bearish order flow. Now I would want to see this continue to 50% at least, and it did not, unfortunately. It'll go to 50%, which is more bullish. So right now we are pretty bullish, but I think things are really starting to heat up again in the Middle East. And I think ICT mentioned, I try not to hold my analysis and my thoughts on price action too much to ICTs, but ICT did say many times that if things start to heat up in the Middle East again, this would probably put shock on stock prices, sending them lower. But what I'm seeing technically in the technical analysis part of things is that we didn't go to a discount yet, and this might be very bullish if we start to disrespect down close candles and really close higher and displace above short-term highs on the daily chart. So anyways, there is one thing that bothers me, and this is the low resistance liquidity is building higher. Oh, let me fix that. That is building higher. This week saw a big lack of manipulation, so I can see how she may want to clean this up during the news. So with the lack of manipulation, prices is really unwilling to continue lower here because relative equal highs here. I mean, this whole Tuesday and Wednesday kind of moved sideways, and Monday afternoon it moved sideways, right? It did not make a very nice big run above short-term highs. It did here, but then not here. So it left a lot of consolidation, and it ran lower. So there's a lot of liquidity higher, and it could want to run back up to take that out, potentially. So, I mean, that new day opening gap was August 23rd. I was talking about on lower time frame from yesterday, not July 23rd, whatever, doesn't matter. So, anyways, I read this. Okay, so and I'm talking about the big trend, sort of like that can be cleaned up. This is what I'm talking about here. There's one thing. Oh no, I'm talking about the Friday news release. Sorry, the trend lower. As you can see, the relative equal highs. So I'm saying that maybe Thursday or Friday can make a large run higher towards these levels after this day closed here. So what are the bodies respecting in the 8 o'clock, 9 o'clock hour? Is respecting the bearish order block noted on the chart, and this refusal to trade higher that this level eventually gave into lower prices. The refusal to trade higher led to this eventually giving into lower prices. Wow. Before this, the ES and the Dow were priced more of a premium and gave in as the Nasdaq started falling. This is the Nasdaq that pulled these other indices down with it. So if you look at the Dow and the S&P, the Dow and the S&P that day were going higher, and only really started going lower when the Nasdaq really started to go lower. The Nasdaq was consolidating and they were going higher. So the Nasdaq is the big market mover. And if you look at the daily chart and the Nasdaq failing to make not failing, but hasn't made it's still pretty far from its all-time high, while the Dow is making the all-time high. If the Nasdaq starts to see shock and starts to fall, that would pull the Dow down with it. Usually Nasdaq is the leading market, and it's most of the time always going to win the battle if you have this, because tech is more volatile. Anyways, all the marked X's can lead into my model, although 930 would have been hard to act quickly and find something good. So you have up here 930 open. That would have been really hard to try and get anything because it's a 15-minute higher time frame level or hourly higher time frame level. It's 5-minute short-term high. However, we wicked so far down. It would have been hard to catch that, to get it in a good price somewhere I trust without having a very wide stop loss. And then later, as we trade lower and we reject higher, we run back up to a 15-minute bearish level, right, which is in a premium. So that could have been a trade longing from down here up to there, and then same thing, bearish going lower after hitting that level, and a second distribution from the morning. All right, and then this is 2 trades you could look for. So this one's obviously a lot better, the second one, because it's in line with the daily bias. All right, and then the 930 open. Something I could have found is after the big rejection, if I didn't get in on a turtle soup, then I could have looked for an inverse or valid gap and see how price comes down to the tick. Certainly is random. But yeah, that's then it's kind of like the same thing here, inverse or valid gap. I like how this is the first gap inside this range that, from this low to that high, that gets respected, and then it continues to run it lower. Anyway, let me just take one more look at that. Okay. Alright, and Thursday, now it's getting good. So today ran up into the wicks from previous 2 days to accumulate. Oh wait, I forgot. Wednesday. Let me read this. I was watching price on my phone and papered the first trade. Oh yeah, so this, I was supposed to take a day off on Wednesday, so I didn't really do anything. But I was on my phone. I was out getting new car keys, and I guess I had time to wait in between, and so I was on my phone. But I basically was able to paper this play there. So I wanted to price, but however, when I took profit at this 15-minute fair value gap, I still wanted price to rush through it, to push through it. I don't know if I would have taken this had I been watching price properly on my computer and conducted analysis ahead of trading. I got off charts when TP hit, so I would have needed to remember that if I had still been in this trade, I would have needed to see displacement past that short-term high, creating a market structure shift instead of a turtle soup. And now I'm talking about this high. Wait, no, I don't. That doesn't make much sense, to be honest, because it did displace. So I think I was talking about the wrong thing there, but okay, so I changed it. So I would have needed to be more attentive to order flow if I had still been in the trade, right? Because this was plenty for me. I was just a small scalp into the 15-minute fair value gap, but I had a bullish bias that day. I wanted to see it run back up higher, and it did not happen. All right, so this is how. This is market replay. I wasn't able to screenshot because I was on my phone. So this is a market replay of how the 5-minute chart looked like. And the reason why I'm screenshotting this is because I'm trying to understand why I thought higher prices, right? And so, this was the entry at the time. This looked like it's definitely going to run up into here and into this fair value gap. It's definitely looking like it needs to displace higher above these highs. But was it risky? I think it was, to be honest. It would have been better to wait for this short. And I don't know, if I was on my computer, maybe I would have seen differently. But I was on my phone, so, and I didn't look at it very much ahead of it because I was driving to the appointment. So I didn't do a proper analysis or anything. But yeah, if I go back here now, actually just Wednesday, I want to see a 15-minute view. Hourly view. I guess one reason why I might have wanting to see higher prices is because we already hit previous day low, previous session low. So looking for shorts, I probably wouldn't have taken that short even if I would have seen it. Maybe not. I don't know. Because I'm gonna say no because it's already in a big premium. But anyways, today ran into the wicks from previous 2 days to accumulate yet more orders at the highs. So today it ran up above the bodies into the wicks, but not above the wicks high. So it's leaving relatively equal highs. Made an attempt higher, but it failed to go higher. After being overextended all day, the afternoon session made a big run lower to clean up all these orders. So this is a super huge extension. Now I did trade this day, and if I was, I traded this day because I hadn't done much trading and I had been waiting for Thursday. So even though there's a huge range, and you can see it's obvious that it's just going higher, usually it's going to be a bad morning session. And what do you see? The afternoon session moved lower quite nicely, right? But the morning session continued to move higher. I was being very careful this day, and I took something that I knew was high probability. But still, would it have been better to not do anything? Sure. Right? But anyways, you can see how what I'm mainly trying to highlight is you can see how the PM session moved only because the previous Asia session, London session, and New York session all moved in the same direction, and so the PM session did the opposite. It was a lot less likely that the PM session would continue this higher price action. That happens sometimes where the whole day goes up, but it doesn't happen often. All right. So, anyways, after being I already talked about that. There is a 15-minute bullish fair value gap that traded down to find support, which showed a quick rejection. I was watching this level to see support, and from my model to form. And I was streaming this, so I did it live, which is pretty cool. But there's this 50-minute fair value gap after 9:30 opens up, pushes it higher. I still wanted to see this buy side liquidity ran out from the previous day, and so I was still looking for higher prices. When I saw the discount in the 15-minute bullish fair value gap, and I saw a rejection, I got long at about here, midway through the gap, and you can see me in the stream talking about how I want to see a large wick. At the beginning of the stream, my voice was muted, and I know some people went in and mentioned that, and one person PM'd me and was like, yo, because I wasn't looking at the chat, and it's like, yo, your mic is muted. So I think the beginning of the stream, I don't know, the first 30 minutes or something, is all muted, but I was, during the trade, it was on, and I was saying how I wanted to see a large wick, and it was reinforcing, and it was nice to see that because it's exactly what I was wanting to see. I mean, obviously, but when I talk like that, when I talk about what I want to see in the trade, what I expect to see, it's good when it happens because it sort of like it motivates, or not motivates me. It's positive reinforcement. Instead, if I were to just put on a trade and not say anything, out loud, and maybe just in my head, it wouldn't have been as impactful, right? And it might lead to more doubt, more uncomfort. But when I talk about what I want to see and constructive steps to this, to reinforce the trade idea, and it starts to play out, that is really, really inspiring and helps me stay more comfortable inside a trade. But anyways, just by looking at the current daily candle, I can see how price may want to make a move higher into the previous day high. However, price is very extended, and I don't feel comfortable taking any longs in this. Alternatively, price may want to head back into the opening gap, which has not been balanced with a move from high to low. So, looking at daily candle, I want to see a move higher up here, right? But I'm not comfortable in this environment, so I was very patient. Another thing too, I just want to quickly mention about visualizing and talking about what you want to see in a trade is if I talk about how I want to see a certain thing and it doesn't play out, doesn't happen, all of a sudden it's kind of like it's priming you to lose, right? I find that's a really nice trick, because if you say that, oh, I want to see a large wick on this candle, it has to be the next candle that moves, and it doesn't happen. Then all of a sudden you're sort of like, oh, it's not happening, and you're kind of like taking in the loss before it even loses, which reduces the impact of the loss, I find. But anyways, I took this trade today. This was my model, and price did run very well. So I walked through what I was thinking and what led me to cut the trade early at about 50 points. So I did take partials pretty early because it wasn't really moving well, and I was already up, so that didn't matter to me. You can go. I just noted that it wasn't important to read it. So I saw the 5-minute lows get cleaned up. Price made a nice and quick run higher to a new day high afterwards. Price did not make it all the way to the new weekly high like I wanted to see. This is showing very tough and frustrating price action. Now, this was a nice opportunity for 120 points, the previous day high with 8RR. Plenty of opportunities, not previous day high. Previous high up here. Plenty of opportunities presented themselves to enter, other than this one that I'm showing. This is just the one I'd be most comfortable in. So this is my model, right? 5-minute short-term low here gets taken out. You could also use a short-term low up there, and then failure. After the second run lower, failure to run beneath that low, and then quickly rejects higher above this high. That was indication that this gap should stay open. Institutional overflow into drill. Stop loss was at the low of it. Ran higher very aggressively towards the high. So I cut the trade at about this level here when it was kind of consolidating like this. I just cut it. I took partials initially here, and then I cut it around here when it wasn't really running. I just wanted to be done with it. And then I want to talk about quickly Asia session, right? How Asia session started delivering. You can see, even though Asia session usually consolidates, the same things that happen in New York session happen in Asia session. My model was also present in Asia session. We open up, have a big new day opening gap lower. We want to look to balance that and move through it. And so we have a 50-minute bearish fair value gap after a run lower, above a inverse fair value gap, balanced price range, right? Disrespecting that down close candle, and now price quickly runs back into this gap, wicks into it, and then runs higher. From there, look, going down to the 5-minute chart, you can see how we initially get down lower here, have an initial reaction up, and then we come back down, failing to get beneath this low, running up. Sometimes we don't make that 5-minute short-term low. I know I marked this 5-minute short-term low, but sometimes you don't get beneath the 5-minute short-term low, and instead we get a failure to trade beneath the 5-minute short-term low. And then same thing, it's a mitigation block instead of a bullish breaker. It's a bullish mitigation block instead of bullish breaker. I look for the bullish breakers instead of mitigation blocks. But it runs up quickly, leaving lots of breakaway gaps, which is indication of really bullish price action. And going into this, look back here. So back here, I remember I was looking at price around 9:20, and at 9:30 I had to leave. So I had 9:30 because I was going to see a movie with my parents. So I wasn't there to study this, but at the time I was looking at this gap, and I wanted to see if this would be institutional overflow entry drill, because it traded beneath this kind of spaced out low there, which is 5-minute short-term low. However, price was absent of a discount. So go back on the 50-minute time frame. It's not my model because there's nothing around here. There's nothing price is trading into on the 15-minute chart that would lead me to take a trade. And so once it did get to more of a discount, now it's better, and then you can start to look for fair value gaps. So I could have taken this one, could have taken that one, inverse fair value gap, whatever. There's lots of different ideas I could have looked for, but the exact same things happen in Asia session that happens in London session. And this is me, the screenshotted 922. This is just to show that this is what I was looking at, that gap, to see if it would support price. And then I wasn't sure, I wasn't confident, so I didn't put anything on, and I just screenshotted it. I wasn't going to put anything on anyway, but I just screenshotted it. Actually, no, maybe I would have paper traded it. I just screenshotted it to keep it there to talk about. Yeah, that's it. And Friday, finally Friday, daily chart today did not make a big run higher. This is not crazy considering we are ahead of a holiday week and at the end of the month. Marking low of day as sell side liquidity for reference. The morning run made a run lower to take out all the overnight stops. After trading to that low, we see aggressive rejection of that level leading into higher prices. Price clearly showed here that she was not willing to move lower and displace beneath the low of the day. Okay, so very clear. It's wicking higher, creating market maker buy model. I love the afternoon price action much more than the morning price action after the afternoon was very clear with a large 15-minute gap which supported price to run higher for the market maker buy model. Think about why. Again, look at the range from London and Asia. It's just higher. It's trending. And when it trends, what does 930 do? It opposes it. Sometimes it will continue in its direction like it did on Thursday, but it opposed it this time, cleaning up all this liquidity. Okay, and then rejecting higher. So then you get another nice run in the afternoon above this high. We're retargeting previous session high. So if you look at what did the previous session do, you want to mark out the high and low, and you want to study the high and low, and you want to see if it trended. You should tape read. If it didn't trend, then don't tape read it. Try and trade it. Sorry. My apologies. I don't mean to say that. What I mean to say is it's more attractive for me to trade. If the previous session consolidated. Not always I'm going to trade it if the previous session consolidated, but just that it's more attractive for me to trade if the previous session consolidated. Okay, and this is the 15-minute gap I was talking about. Okay, now there's a lot of things here in the market maker buy model. Basically every X except for these two aren't really good because it's in premium. But this is all my model. 15-minute PD array, right? We have the rejection block here, and then the bodies run up. Now, why am I using the bodies instead of the wicks? Because this was a very long wick. So if we take that as an anomaly, and we look at the bodies, the same concept behind why I want to see a short-term high get run out occurred here. We had an initial move lower, might have tricked people into shorts, then we had a move above it, might have tricked people into longs. Basically, both sides of the market were triggered, and then prices efficiently had the counterparty to efficiently run lower, all the way down to sell side liquidity. Right, and then the same thing happened back here. 5-minute short-term lows, a bit of consolidation, and then a quick run up. And this is the sell side curve. And you see some of the different things, PD arrays you could use. I could have used. Alright, and this is the buy side curve, and I like this inverse fair value gap pretty well, and order block supporting it. There isn't really a nice big institutional order flow intraday, but we do have the inverse fair value gap, which runs price higher from there. It's right above the 50-minute bearish fair value gap, and that's it for the week. So real quick, if I bring it to just trading view. When I look at a session, I have just to recap for the gentleman, if you watched the entire video, I break it down into 4 sessions. Why is it doing that? Four sessions like this. And then, it doesn't, it's not always, because I know you were saying that somebody, ICT, said that the sessions are all do the same thing. You thought that Asia, let's say, consolidated, and then London made the high of the day, and then New York expanded lower, and then the afternoon retraced or did whatever, continued re-expansion, whatever you thought was going on. When in fact, not necessarily all the time this is what happens. Let me get these closer to each other. So now it's better. Right, because sometimes what can happen is, take these different scenarios, I guess you could call them. But sometimes, right, what you can get is Asia that expands, and London that expands, and then New York that just seeks and destroys, and then the afternoon session that retraces lower, right? And that's not necessarily doesn't have to be a London high of the day or low of the day. Asia can make the low of the day, and then if there's FOMC, sometimes the day can make the afternoon can make the high and low of the day. Right, so what you have to look for is, again, what's most important is where is the liquidity and what time are we? Because each session is going to behave the same. So each session will have a sort of accumulation, a manipulation against the session bias, and then it'll go lower. Right, in the next session, if it's going to go the other direction, it's going to have some sort of accumulation, right, and it's going to have a run against session bias, and it's going to go higher. And same thing, some sort of run. It's hard to really draw because of the magnet, but each session is going to do this. It's going to AMD, accumulation, manipulation, distribution. AMD all day. There's M and then distribution. Those 3 stages is going to do that over and over again. Each session is going to do that. And it's going to play into a bigger daily candle. It's going to play into a bigger, higher time frame or whatever candle. Alright, so when you put all these things together, now you get, you basically are very precise. You increase your probabilities, and then you're basically reading the algorithm firsthand, or the most precise way you could. And that's all really for the week. Hopefully that helped you. If you have more questions, feel free. Anyone else, feel free to comment. I always love answering questions. I don't aim to answer the questions, but it's just I like helping people. So if you have a question, of course, let me know. It gives me more reason to make a YouTube video to talk about things. Otherwise, I won't really post. Yeah. So anyways, that's it. Have a good day. Except for week reviews. I'll always post week reviews. But yeah, have a good rest of the weekend.